what did you make of this session? Do you think we can take some comfort in the fact that we didn't end as low as the Shanghai Composite in the end?
And I think that was the major issue for the Australian market. Positive leads from the US, hopes around central bank action, but we saw the Shanghai Composite down by about 1.3% today, and that really managed to drag down the gains that we saw in the morning. You can see from the intraday graph behind me exactly how we traded today, so it wasn't a pretty pattern. In the end, down by 0.1% or 5 points, and that really represents the number of companies that went ex-dividend today. Ansell, ASX, we also saw the likes of Woodside Petroleum, Coca-Cola Amatil and Suncorp Metway, and these stocks together shaved about 5 points off the index. So if you exclude the ex-dividend stocks out of the market's performance, it would have been a pretty flat day. Also quite interesting that we are really seeing central banks back into the spotlight. A number of comments that the market has been focusing in on. Of course, we heard Ben Bernanke's comments, but also Premier Wen Bao over the weekend talking about China requiring more stimulus to help stimulate that export sector. We've also seen the Bundesbank president come out to say he doesn't support bond buying or the bond buying program, and Europe back from its holidays, so Europe back in the spotlight, and also Jackson Hole this weekend. So a lot going on in terms of the market, but the Australian market, positive lead from the US, really dissipating because of the negative performance by the Chinese market today.
Yeah, and low trading volumes as well, Michael and Julia. We did see just a tick over $3 billion worth of shares changing hands. Even if we do get this central bank action that we seem to be anticipating so much, is it really going to make much of a difference to market participation going forward?
If we have a look at the volumes coming through, Monday is usually a pretty slow day for markets anyway, and that's, I think, being made a little bit worse by the fact that we have a UK holiday tonight. But all up, I think it is pretty quiet at the moment, and I guess there's a lot of nerves coming about in terms of the Australian market. Part of that is the way that iron ore prices are at the moment. The spot price is below 100 US a tonne, and then, of course, more signs that China is slowing. We saw industrial profit numbers out, and they declined 2.7%, so that's the fourth consecutive month where we've seen declines in these numbers. And of course, China itself in the middle of earnings season. We've seen 2/3 of Australian companies reporting earnings, and the PE of the Australian market's at around about 13. If you have a look at the PE of the Chinese market, it's down at 9.4, and we saw some more signs from companies that we are seeing things slowing down in China. So if we run through some of those Chinese profits that came out today, we saw Sinopec coming out with its first half profit results. We saw first half profit down by 41%. In fact, the lowest half year profit result that we've seen since 2008. So that stock down by 1%. We also saw Haitong, which is China's second largest brokerage company, coming out to say that first half profit was down by 9.4%. So that stock was down by 3.5%. And also GF Securities, which is China's third largest brokerage company, actually limit down today. So down at that 10% limit. And of course, it's got China has limit down regulations where it can't fall more than 10%. So Chinese companies also in the spotlight, as well as those industrial profit numbers, and that's on top of some of the PMI numbers that we saw coming out last week. So just a little bit of concerns in the market. We're still seeing signs that China is slowing, and although it's aiming for 7.5% growth in 2012, in the past it's always exceeded those targets. So I guess the market's just getting a little bit jittery about these signs coming out of China, and yet no word really on any huge stimulus package.